Hey, it's OD, and welcome to this week's episode of Darn All It Does. This week I went out west to determine what real estate prices in San Francisco, California were like. The aim of this was to determine for real estate single family homes, does it make more sense to invest now, or would it be more of a better cost savings to invest down the road, like in the future? So, for example, 3 months from now, 6 months from now, say December 2024, January 2025, March 2025, etc. The aim was to determine could I create a model that would increase return on investment for single family home buyers or sellers. Super excited to show you and demonstrate that yes, I can, and yes, that is something that is possible. It was quite surprising with the potential cost savings were so substantial. And with that being said, I'm sure you're super excited to actually see it. So let's get started. The problem statement that I was working to achieve, working for solving should I invest now or later, single family real estate, San Francisco. First thing I did was import my necessary library, so NumPy, Pandas, Matplotlib, sklearn, stat models. And again, this is for a linear regression model. So I'm going to go ahead and run this. Now this data set is specifically in the neighborhood of San Francisco. It's from 2021 through 2024. And the neighborhood that I was taking a look at was close to Financial District, and 941043 is zip code. And this will be the real estate data for single family homes starting in 2021 through August 8, 2024. So I'm just going to go ahead and load this data set. Taking a look at it, it seems like we have 44 entries, total of 3 columns. Those 3 columns are the date, the price, and then the month number. Taking a look at the first 5 rows, we can see that the first row is from January 1st, 2021, and at that time home values were 1.32 million. Same for February. In March we see an increase to 1.3 million. April stays relatively flat at 1.32 million, and then May 1st, 2021 increase to 1.33 million. Take a look at the tail. Here I can see that my last 5 rows are from April 1st, 2024, May, June, July, and August. Furthermore, I can see that, for instance, in August 2024, the price for a single family home in San Francisco was 1.018, and then July it was 1.022, and then June 1.020. Similarly, if I took a look at the descriptive statistics, so I want to determine the averages over the last 44 months, and similarly I want to determine the highs and lows. So I can see that the average over the last 44 months is 1.225 million, the low was 1.01 million, and the high was 1.396 million, almost $1.4 million. And then this is the same statistics as above. Again, I haven't applied any of my machine learning linear regression models that I'm building quite yet. This is more descriptive statistics and advanced analytics so that we can determine trends and, most importantly, what numbers we think we should be paying for a single family home in San Francisco based off the historical analysis of that data set of single family homes that were sold in San Francisco. So again, I'm going to go ahead, as I mentioned, take a look at my complete data set if I were interested in, as a data scientist, 2021 through 2024, 3.5 years plus worth of data, 44 months. Now what I want to do is actually plot this and visually represent this data so that from an analysis perspective I can walk you through on some of my findings. So on the x-axis we can see the duration and the dates. So for example, January 1st, 2021, August 2021 is our second value on the x-axis, third value being March 2022, and then the x-axis concludes with the last, as you can see, August of 2024. And then on the y-axis we have the prices in millions. First value, January 1st, 2021. The home price then was a little over 1.33 million, it seems like, and then it decreased in February, March, April. Then we see an increase May, decrease in June, then an increase in July, decrease, increase, 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 all the way through, I would say, June, May, June of 2022. I believe during this duration is COVID. And then similarly, we still are in COVID. Now we're seeing, interestingly enough, a decrease in home prices in San Francisco during COVID. I would say actually during this time, COVID was probably getting a little bit better as far as infection rates. So interestingly enough, while we saw an increase starting around, I would say, what is this? June, May, June, July, so May of 2022, you can clearly see a decrease in prices all the way through March of 2024. Interestingly enough. And then what we're able to see is an increase, and then a decrease. So visually, this is the complete data set for San Francisco single family monthly historical prices starting January 1st, 2021 through August 1st, 2024. Now I actually am going to apply my machine learning models as far as being able to predict X features and for the Y target, as we can see here. So what I'm hoping to accomplish are to get my OLS results, linear regression models, and feel confident about the model. All this is great. So I'm going to interpret some of these values and walk you through what this means and how this demonstrates with pretty good confidence and reliability the model. So starting with the dependent price, as mentioned, I'm working towards the price, predicting future prices. As far as predicting and how good these predictions models are, one of the ways that you can take a look at that is looking at the R-squared score. And what we can see here is this R-squared score of 0.822, which is indicative that 82.2% of the variance in house prices in San Francisco during this duration can be explained by the original date variable. So this model fits extremely well, given the higher values closer to 1 indicate better model performance. And my model is at 0.822. Similarly, for the adjusted R squared score, which is 0.817, this is indicative and adjusts the R squared value by the number of predictors. Given that we only have one predictor, date, the adjusted R squared is nearly identical to the R squared value. And interpreting this model is highly accurate even when I adjust it for the number of predictors, in this case date. Similarly, the F statistic and probability F statistic scores, starting with F statistic and probability F statistic here, given this probability F statistic is close to 0, I know that this model is statistically significant, and this is also validation that as a whole, this model has a very strong relationship between the date and the price. If we look at the PT value, the t-square value, which is close to 0, for the constant, similarly for the month number, also close to 0. Given that the intercept and the slope have p-values of 0, that's indicative of high statistic significance, and I can confidently say that the date original does have an influence to house prices. Similarly, if we look at the standard error, it's relatively low. So standard error here for constant, 17,600. Given that, smaller values are indicative of more precise estimates, I can see and demonstrated that the values are relatively small, which is indicative of precise estimates for the coefficients. So that was a comprehensive summary of the OLS results for my model at San Francisco single family home. The last two parts are now to demonstrate even more the robustness of this model. 80-20 split, again, more linear regression training and calculating the metrics associated with that. So the absolute mean error in addition to the mean squared error. And I'm going to return the slope, the intercept, the MAE, and then the RMSE. Here are my results for my test. And then given these values are extremely close, for instance, the mean absolute error of 886,194, very, very close to the mean squared error of 87,572. I feel even more confident in addition to these indicators up here of my model. And now what I'm going to do is actually fit my linear regression model on the data set. So this is what the linear regression fit looks like on the data set from 2021 through 2024, single family homes in San Francisco. As we can see, the blue dots are indicative of the actual prices, and on the x-axis we have the duration, the time series, so the years and the months. So for example, January 1st, 2021, and then it concludes July 2024, and then we have our blue plots. Here's the trend that I walked through earlier, and then I've demonstrated the trend line across the data set as well. So again, I've computed the future values in addition to being able to demonstrate the linear regression line. The future values are something that I'm going to walk you through. So as I mentioned, what I wanted to do next is to actually predict the future prices over the next 12 months. So given that my data ends in August 2024, as you can see over here, this is July 2024 and then August. What I want to do is predict out for the next 12 months using my model, and then using this model kind of do some computations on top of that to determine whether or not it makes sense to invest now, or it would be a better investment to invest in the future to finally answer the question that I was hoping to solve for, and I did solve for. So here are my OLS results. Again, to summarize, 0.822 for the R squared scored, and the adjusted R squared score of 0.818. And then my OLS linear regression equation, prices equals to negative 311.1706 times the data original plus 231,007,883.28. And here are the future prices starting in September 2024, October, November, December, etc. Lastly, I'm going to kind of conclude with illustrating and visualizing the future predicted prices for the 4 use cases. So November 1st, 2024, January 2025, March 2025, etc. So the future predicted price for November 1st, 2024 is $993,342. The future predicted price for December 1st, the following month, is $993,342 was the price for November. And then for December, we're seeing a future forecasted price of $984,006. Last 2 use cases are for January 1st. For January 1st, we are seeing a future predicted price of $974,360.64 in San Francisco. And then the last prediction that I did was for March 1st, 2025. So I just want to kind of take a look at that. And for March 1st, 2025, future predicted price, $956,000. So to summarize, I've been able to demonstrate the current historical prices in addition to forecasting the future prices using advanced analytics, in addition to using AI, machine learning supervised models, learning machine models, in this case linear regression. Now, given that we have that, I've been able to answer the question that I was hoping to solve for and help hundreds, if not thousands, of home buyers that are looking to purchase and add to their investment portfolio in San Francisco, California. So remember, our average over the last 44 months was 1.225 million. So we can see that value here, right? Now, we know that our future predicted prices are based off my model. For instance, September, we're looking at 1.01 million. October, again, kind of remains flat. November decreases, December decreases. So my recommendation, interpretation, and using my machine learning models are to buy later as opposed to buying now. And I'm going to demonstrate the cost savings. So the average right now over the last 44 months looking at this data set is $1,225,701.66. Now we take our average and we subtract our future predicted price for November 1st, 2024, as we can see here. So September, October, November. And we subtract November future predicted single family in San Francisco from the average. And when we do that, I arrive at $232,359.59. So this would be the cost savings if you were to buy later as opposed to buying now in this neighborhood in San Francisco. Similarly, if we do this exercise as I demonstrated earlier for January 1st, 2025, the cost savings would be even more substantial in the sense that future predicted prices are expected to be reduced to $974,360. We take that and we subtract that from our current average, and we arrive at a cost savings of $251,341. Lastly, for March 1st, 2025, future predicted price of $956,001.06. We subtract that from our current average, and we see that we have a cost savings of $269,700. I know that was a lot of information and a lot of analysis and a lot of computations. I also know if I had the opportunity and was informed of a cost savings in excess of $200,000, as I've demonstrated, that would be something that I'd be very interested in doing my own research and verifying